If your finances feel like a subject that you keep meaning to get around to, then you are exactly who today's episode is built for. Hello and welcome to this week's episode of For the Love of Chiropractic. I'm your host, Dr. Robert Freeman. My special guest this week is a former corporate chief financial officer and CEO of Kickstart Accounting, Inc., where her team serves nearly 750 small business owners. She left a decade in the boardroom to give specifically women entrepreneurs the kind of financial clarity that used to be reserved for only big companies. Today, she's going to show all of us how to stop dreading the numbers and start using them to accurately run a better business. Welcome to Season 3 of For the Love of Chiropractic. Season 1 has 60 episodes of practice management tips to help you build the best practice possible. Season 2, 3 keys of my success, 50 interviews with the most successful chiropractors from around the world. Season 3, resources for your success. So let's listen up and learn how to build a great business. So I recently had the opportunity to catch up with Danielle Hayden by phone. Danielle, are you there?
I'm here.
It is so good to be chatting with you, and I know how busy your business and your schedule is. Thank you for taking the time and making the time to do this conversation today.
Oh, I love talking about numbers, so I am excited to be here.
Yeah, I love your background information, and how you went into the boardroom, you became the chief financial officer, and now you're the CEO of Kickstart Accounting. And as I read all your information, you obviously really like to focus in on helping female entrepreneurs. So first of all, are you willing to help the other half of the population also?
Yes, of course. So we have a lot of clients who are men as well. When I left the boardroom, I started working with entrepreneurs. And what I found was that, as a CFO, as a chief financial officer, I get really excited about building budgets and having strategic conversations and planning for the future. But most business owners can't look to the future until they understand where they've been. And so we lead with bookkeeping. And historically, women have not had access to that type of support in their business, and really gravitated. Accounting industry is very male dominated. And so as I started to make my way into this industry, found more and more women who needed access to support, needed education, and needed a space to just say, hey, look, I'm really good at my craft, but I don't understand this business stuff. Can you help explain it to me? And so that's really our specialty, is not just handing you a set of financial statements, but making sure that you understand them and taking the time to have a conversation. So of course, that applies to men as well.
Right. I love that. And I couldn't agree with you more. It is so important. And I love that it's your passion. You can hear it in your voice that this is where you live. This is your wheelhouse. So one of the things that we had discussed before we started recording was the real reason that most business owners never pay themselves enough. Can you dig back into that?
Yeah, so there's a few pieces of this. There is a money mindset around what we're worth and how to pay ourselves. But I think that ultimately this is because of tax strategy. I'm online and I see all these Instagram tax gurus who are talking about writing off every vacation that you take your family on because your family's on your board of directors. Well, how about, I want to turn this on its head, okay? And I want to encourage anyone who's listening to think about their business as something that's healthy, sustainable, and valuable. And what I mean by valuable is that at any time, an investor can come in, buy your practice. They can give a loan. You can go out and get a bank, a line of credit. And I want you to build a business that is valuable, that is worth something. And we create a business of value when we pay ourselves as a CEO, as a business owner, what we're worth in the business. And that doesn't mean commingling business and personal. It means taking a real, actual, reasonable compensation salary home so that you can support your family and then run that healthy, sustainable business.
I love that. Yeah, when I ran my practice for so many decades, I always kept really really clean books. And I've had many friends and colleagues say, "Oh, you can sort of cheat that and wiggle that." It's like, no, I like it super clean, so I really know how efficient a business I am running.
Yeah, you know how efficient your business is running. Thank you for saying that. You don't actually know the health of your business if you are putting through all of your personal expenses. If we had a client come to us a few years ago and she said, Danielle, can you teach me how to run my business at a loss? I'm like, okay, Jenna, odd request, but I'll help you. So we did what we call a catch up. We got all of her transactions into QuickBooks. We get everything loaded up. And on her financial review call, I said, Jenna, I got good news and bad news. The good news is that I don't have to teach you how to run your business at a loss. The bad news is that we don't have time for any real tax strategies. Here's the thing, Jenna. When you run your personal expenses through the business, it clouds the health of your business. Your business doesn't have a problem. You have a problem between separating your business and personal. Your business is healthy. Your personal spending is not.
Right. But, and one of the things that I've spoken to so many doctors about as they're looking to sell their practice, the first thing that I've said, and then outside practice consultants have said to them is, okay, you have to separate your personals out of the business so that you're really showing your prospective buyers what they're getting, because the prospective buyer isn't going to be paying to clean your house, to pay for the internet at your home and some of the other things that people often run through the business. Clean books. But that brings up something else that you and I had begun to talk about, and I just can't wait to hear more of your thoughts on it, which is, why does your childhood money story run the business? Like, how does that come in?
Now think about it. And I think about like Mr. Rogers every time I tell this story, but we don't get to put on a hat or a coat when we walk into our business. Unfortunately, we take our entire personal life and all of our stories into entrepreneurship with us. So, that teacher who had a poor money story, who talked poorly about money. Yep, we're bringing that with us. That friend's dad who owned the restaurant that went out of business, and then your parents, talked about them at the dinner table. Yep, we're taking that story with us too. All of those stories that we've heard growing up, and I think that this also is compounded these days with Instagram, Facebook, LinkedIn, Twitter, like all the stories that we're hearing, it shapes who we show up as a CEO and as a business owner. And what often happens is we think that we're overspenders. So, we're trained to think, oh, I have an Amazon package at the door every day. He. Well, that's brilliant marketing for Amazon. But for us as people, we're now trained to think, oh, well, I can't hold a budget. I spend too much money. I got to cut back. Come into our business and our mindset is, I got to cut back to become profitable. When really we need to have healthy spending. If we're building a sustainable business, then that means we need outside services. We need marketing and advertising. We need to have payroll, professional development. We have to have a full facility. And in order to do that, we have to have healthy spending, which doesn't mean we're cutting back in order to be profitable. We're charging the right amount for our services. We are running a sustainable practice. We're separating our business and personal. We're doing all the things that we need to create that valuable business. And that means checking our mindset at the door. What stories am I bringing with me into the business?
I so love that, and I couldn't agree with you more. And it actually applies to everybody who you have working for you. If the doctors will think about if they've ever had a person working their front desk that had money troubles, for whatever reason they found themselves in money troubles, and they had to then ask the patients to step up and pay after their visit. What I found so many times was the person who had money troubles couldn't simply collect the copay or couldn't collect the fee for the day because they felt bad about asking for it because they didn't have a good relationship with money. So They didn't feel like they could ask the person for money, and it didn't work. As the CEO of the business, right, you have to be clear on all of that and know your worth, exactly the way you said it. I couldn't agree more.
Yes, know your worth and know the type of business that you're building in the future.
So when you talk about building a business, lots of people go back and forth about whether they should outsource to outside contractors, or have the person on the books as an employee. What's your opinion on that?
So I'm going to say it depends on the role. So every business will always have some type of outside services. And when we first get started as a business owner, we need outside services. These are the people who are experts in what they do. So our contractors, who will always stay in outside service, are usually our tax accountants, bookkeepers, maybe an outside VA, our marketing consultant, the person who's running paid ads. Those are the people that you want in your business as a contractor, because they hold the expertise in what they do. You do not hold that expertise. Now, when we are building the business, we want to have our contractors who are holding our brand. So the people who we determine what time they show up, what time they leave, what SOPs they're following, standard operating procedures, how they're going to conduct their work, how they're going to present themselves, how they hold the brand. That's when they become an employee. And I think that the misconception is, well, I can save money if I keep on paying these people as contractors, because I won't have to pay the payroll tax. Well, it's costing you money by the way that you have to treat them and the way that they respect your business. I want to encourage us the only outside services that we have are the people who are an expert in what they do. If not, we as a business owner, we control when they come to work, how they present themselves, how they complete their job, and how they carry our brand. And those are employees, and that's going to save you more money in the long run in your brand reputation, not to mention taxes and lawsuits if it goes the other direction.
Okay. Wow. I'm just beginning to put all that together, what you just said. That was fantastic. So let's touch on something that I wasn't sure that we were going to dig into or not, but tell me about what happens to your finances when you start to add new revenue streams. So for chiropractors, perhaps we start doing laser in the office, or perhaps we start doing decompression, or we bring in some other outside contractor, whether it's an acupuncturist, massage therapist. So we're taking the practice and we're adding this now.
Yeah. Here's the practice that I want every single one of anybody who's listening to start to embody. To know where we're going in the business long term. So I believe that every business owner should have a 10-year North Star. So when we work with our CFO clients, we work on creating the long-term vision first. Then we create a 3-year plan. Where is the business going? Once we understand the North Star and where the business is going, we can create a 1-year budget with quarterly key performance indicators. The problem that I see in entrepreneurship is that we are visionaries. We get really excited about the new opportunity and all the money that it's going to bring in, or all the people that we can serve, and how excited we are about the new thing that we get to do. And I want us to remember the business that we're building, why we're building it, and then having a team of people, a money team, to help hold you accountable. Because when we add a new revenue stream, often what we see with our clients is that the profits actually decrease before they increase. And we have to, as business owners, be able to withstand that pain. It is painful to watch that and to be able to be held accountable to seeing that through. So again, I want you to have quarterly key performance indicators that are monitoring, a 1-year budget, a 3-year plan, and a 10-year North Star, and then allow your money team to hold you accountable, because I promise profit's going to dip before you see the hockey stick.
So what I think I just heard you say, and we might need to flesh this out a little bit, is with a 10-year plan, the North Star, what it is you're building, what you're building towards. So as you look to bring other things in, AKA, other revenue streams, you would, and I don't want to put words in your mouth, so I'm asking you, you want to make sure that that revenue stream fits with what it is you're building.
Yes. You know how many times I see business owners get an idea and they're like, well, I need to have, Joe Schmo down the street, and then this guy in this county and this guy in this city, they all have these new techniques that they're doing. Or I saw at a conference, and I love it. And I want us to be able to bring all of that, but only if it aligns with the growth strategy. Because if not, those are really what we call giant, unprofitable distractions.
Mm-hmm. I one time had a friend who's a chiropractor stop by and visit me and said, oh, I'm doing this great thing through my office, and you ought to do it also because it can be incredibly profitable. I've started offering Amway products through my practice. It's like, what? And we simply said no, thank you, and because that isn't what we do in our office. We're not Amway. We're providing chiropractic care, so we didn't do it. And ultimately, that doctor gave it up also. But I mean, to me, it sounded like a huge distraction. Like you're going in a totally opposite direction.
But think about that almost feels like an obvious one. Think about the supplement line that it's close. It can be a little bit closer, but when you really think about it, do you want to hold inventory? Do you want that partnership? Really thinking about where you're going, because having that North Star is what grounds you into those decisions. And look, maybe you say, I want to have 4 to 5 revenue streams. That's my goal. I want to have more revenue streams than just this one. And so I'm going to slowly build them over time and flesh them out. Then that's perfect. Then that aligns with your 10-year goal, and we can create a budget and a plan to get there.
I love that. Exactly. And they fit together because it all creates this one beautiful piece that is the practice.
Yes.
That is fantastic. So one of the other things that I wanted to ask you about was there are 2 different ways to keep your books. And no, I don't mean on computer versus on paper. I'm talking about a cash system versus an accrual system. Can you comment on that?
Yes. So as we're growing our business, we have the option to keep our books in cash. What cash means is that when the cash hits your bank account, that is when it is considered a sale. That's when it's considered revenue to your business. Not any time beforehand. It is not a sale until cash hits your bank account. So if you charge someone's card on the 30th, but it doesn't get deposited until the 1st or 2nd, then that is not considered a cash sale until the 2nd. Same with expenses. When the cash leaves your bank account, not the day that you write the check, the day that the check is cashed, that is considered an expense to your business. And when business owners are starting their business, cash is a much easier way of starting your business. You're not holding inventory. You're not holding revenue. You're keeping balances on the balance sheet. So it's very easy for you as the business owner, as well as for your accountant. Now, as we continue to grow our business, a lot of tax accountants love to throw an accrual strategy into the mix. And if you do not have the people, the systems, and support in order to think through having an accrual system, what that means is I'm going to book this revenue today, even though I'm not going to get cash until 3 months from now. So I'm going to book the revenue. I'm going to invoice this patient, and they're going to be able to pay me in 3 months, or they're going to make payments towards us in 3 months. It adds a level of complexity to your business that if you don't have the right team, support systems, and computer systems to help you maintain that, it's a much more complex system for you to manage as a business owner.
Yeah, I totally see that. Just as you were starting to talk about, I was starting to get palpitations. Like, ooh, that sounds way too complicated. People, systems, support.
I go here.
Yeah. So, Danielle, sadly, our time is beginning to run out. But I did want to ask you, You've shared so much valuable information. Is there anything else that you wanted to make sure that you got to share with us? Maybe a tax strategy, something you see that typically people forget about and leave on the table, so to speak?
Yes, I have. I'll give you one from my heart. The most painful thing that I see business owners falling victim to is a strategy from their CPA. The CPA emails you Q4 and says, you have profits, go and spend your profits and reduce your tax liability. And I want to encourage anyone who's listening to take a pause and think about the type of business you want to run. Again, go back to your 10-year North Star, your 3-year plan. What do you want to do with this business? If you are creating a healthy, sustainable, valuable business, then it's time to stop running your practice for a tax strategy. You don't need to go and spend money to reduce your tax liability. You need to set your goals and know exactly what you're spending, when you're spending, and why. When you have profit, you celebrate the fact that you have profit. You now have a business that's what I would call actually valuable. And so I want to invite everyone listening to stop running your business as a tax strategy and run your business for something that creates value.
That's fantastic. All right. So I have 2 final things to ask you as our clock is running out. Number 1, tell me who your ideal client is. Who's the ideal person you say, oh, I love working with these kinds of people?
Yes. I just had a discovery call with somebody today. It's somebody who knows that they're ready to grow. They can't be the one doing everything on their own. You're ready for strategic support. You know that you, as a business owner, shouldn't be doing the bookkeeping, that you know you need a system for support. When we work with our clients, we strategically categorize every single client, providing you with a beautiful CEO dashboard at the end of each month called the Snapshot. So it's for business owners who are ready to make business decisions based on your numbers, and that you want to have a healthy, sustainable, valuable practice. We're not the tax firm that's going to save you the most money, because that's not the strategy I believe in. I believe that you deserve value.
So is your ideal client someone who's just starting in practice, been doing this for a while, or they're towards the end of their career? Or all of them?
All of them, truly. Our business is designed that our pricing meets you where you're at. So if you are just starting your business and if you don't have revenue yet, it's probably not time. But as you have consistent revenue, you have a real business, you are consistently seeing patients, you have a business that's working, that's the time that you need our support. And then we grow with our clients. We have our CFO, we have our bookkeeping and CFO support. And so as your business grows, hitting $1 million in sales, we start looking at our CFO services to help you plan for the future and grow strategically.
Fantastic. I love it. So, and my final question is, if someone wants to get in touch with you in Kickstart Accounting, how do they do that?
Go to kickstartaccountinginc.com. There you can book a discovery call and connect with my team and I.
All right. And that's our show for today. If you have a question about today's show or your own practice, feel free to reach out at fortheloveofchiropractic.com. Before making changes to your practice, be sure to seek legal advice regarding those changes and regulations in your state. For the Love of Chiropractic is an RGF production, all rights reserved. And thanks for listening. Original music provided by Hunter Rich Music.